Good morning to all traders and welcome to another daily market insights video provided to you by Orbex. Today is Thursday, the 25th of July, and we're going to talk about two minors. I've chosen Euro Aussie and also Pound Yen for various reasons. Now, Euro has been quite a weak over the past few days because everybody's waiting for ECB to reiterate a dovish message. At the same time, European PMIs disappoint. So that is still adding pressure on the euro. Now, on the other side, RBA's law spoke overnight, and he's also reiterated a dovish message saying that if there is need to stimulate the economy, they will cut further. Now, saying this, Euro Aussie is a little bit supported to the upside, but if you ask me, I believe this is all a part of a short-term correction, which is going to be continuing to the downside after the ECB's decision today. Now, pound, of course, Mr. Boris, as you know, is officially now the PM in the UK. That has supported the pound in the short term because he's actually reiterated that he's going to respect the deadline for the 31st of August pretty much, and they're going to leave the EU. So that adds a little bit of confidence, and now pound is actually moving to the upside. Pound was the only pair that didn't have any major news yesterday, but the thing is that globally, manufacturing PMIs disappoint, right? And this is what actually brings the trade war effect back onto the markets at the moment. So we see Japanese, French, German, Euro area, and also the US PMIs are all disappointing. Okay, so we're not looking just a case for one central bank cutting. We're talking about all central banks cutting rate to stimulate the economy. Now, when I start with Euro Aussie, we moved exactly as we expected with a combination of running flat and then expanding. That means that expanding, we are still waiting for an impulsive move to the downside to end this correction and then move all the way up, or even continue lower. But I think the case most likely will be to move up after that level. 157, 156 has been taken out. Down on the 4-hour, we are still moving within this nice channel, 1, 2, 3, 4, 5. Okay, that's how I see it, and within that I see the first impulse correction, second impulse correction, and then I want to see a third one coming in, supported by the RSI. Now we finished the 300 Fibonacci extension of this first wave over here, and that's why I'm expecting another move to the downside. That would also, of course, validate that indeed this is an impulse move to the downside, and will validate the expanding flat formation as well, structure. Now, if we go a little bit lower on the 1 hour, we're still moving within this channel. So, this move looks like a correction, to be honest. Nothing impulsive over here. So, if we see a correction up to that level, since Aussie is a little bit weak and then price is moving lower, that would be exactly actually what I'm expecting. Now, the thing is, prices could move a little bit higher, right? They could go to the 50 Fibonacci retracement around 160.62 or so, which means that would be just pretty much a false break. But if we broke that level, then the chances of lowering down would be limited, with, of course, the 161.59 being the invalidation point. Okay. Down on the pound, of course, pound yen moved exactly as we expected as well. We are in an ABC corrective move. We're expecting wave C probably ended down here with a C impulsive wave, 1, 2, 3, 4, 5, around the 78.6 Fibonacci of this wave A. At the same time, this is also, of course, the 2.61, actually the 2.5, if not mistaken, of the Fibonacci extension of the AB correction. Yeah, exactly here, 2.5, okay. And we are moving, we've had this an impulse within an impulse, wave 4, and then wave 5 most likely has ended here because we'll also get some supporting signal from the RSI. Although seeing this as some sort of end and a reversal to the upside. If we go down on the 1 hour, the truth is that as long as we remain trading within this channel, right, we can still expect another move to the downside. Now, the thing is, since we finished it, we finished one wave 5 down here, looks like at least, and now we are correcting. That really looks like a correction, okay? Now, what I mean by this, I would expect this, okay, if there was a reversal, right, I would expect it to be more impulsive. It's not impulsive, okay? Over the past, the few hours in the back, they are somewhat impulsive, but they just actually retraced up to this level and then start moving lower, which means that if we break below that level, we're still looking to come down to that level, okay, to really end wave 5, which will be also the end of wave B. And then from here, we can start looking from buys. That would be around 133, 132, 133. We would also create a false break between the previous low. So on this one, I'm really looking at further signs to take a call, okay? And that call would be, of course, going to above 150, around 150 levels or so, if not mistaken. Let's go on the daily to see. Yeah, that call would actually go, around 146 at least. Okay, so don't forget ECB today, really expecting the euro to weaken as the markets have been showing. If that would be the case, euro dollar can go down to 110 or so. But we're looking at euro Aussie, of course. I'm expecting the correction and then continuation to the downside once the ECB's decision comes out. Thank you for being with me for another day, and I want to remind you as always to visit our blog, is where we cover the latest news, providing trading ideas and all the necessary tools the trader needs.